Hello and welcome to Stringham Real Estate Edge. Our guest today is Trent Hendry from Mountain View Title. Trent, thank you for being with us.
Yeah, thanks for having me.
Tell us, how long have you been with Mountain View?
I've been with Mountain View for 21 years.
No kidding.
Yeah.
And is it a local company or national in scope?
It is a local agency for Utah only. We've got 9 offices across Utah, but yeah, we're just in the state of Utah.
Now, over the years, you've developed a specialty of 1031 exchanges, correct?
Yep, yeah, that is one of my niches. I've got many, but that is one of them.
Tell us what a 1031 exchange is.
So a 1031 exchange is when an investor or owner of an asset can sell that asset and roll the gains or any profits they have from that asset to purchase another asset. So in this instance, we only do real estate 1031 exchanges. So if an investor and owner of any type of real estate can sell that real estate and buy another investment property and defer the capital gains tax that they would normally pay when they sell an investment property, defer it so that they can roll all of their proceeds from that sale into the purchase of a new property.
So you say the taxes are deferred, they're not avoided.
Correct.
Okay.
Yeah.
How many transactions do you do a year approximately?
It fluctuates. I probably do anywhere between 30 and 40 exchanges a year.
So it's a pretty active market.
Yeah, depending on what the capital gains rate is, it becomes busier. When the capital gains rate is higher, we tend to be busier because, that people don't want to pay that higher tax rate.
Sure.
My dad has been doing exchanges probably for 30 or 40 years.
So obviously it's not a new concept then.
No.
How far back does it date?
I believe Section 1031 was enacted in 1921. So it's been around for a while.
The incentive was always the same to defer tax liability.
Yep.
Can you give us an idea in total dollar volume of 1031 exchanges throughout the country?
I did a little bit of research on that and really couldn't find anything. I think it's mostly because, especially here in Utah, we're a non-disclosure state, so a lot of, sales prices and whatnot, they're really only accessible to real estate agents. So wasn't able to find that. I can tell you there are thousands of exchanges done probably in just Utah alone every month. Nationwide, I'd say tens of thousands every month.
Are most of these investors sophisticated buyers and sellers of property, or do they lean on you for a great deal of your guidance and counsel?
Yeah, I'd say more often than not, they're leaning on us for guidance and counsel. I have friends that are selling investment properties, and they send me orders as the title company, and I ask them, I said, have you considered doing an exchange? And a lot of times they're like, I didn't even know of such a thing.
There was such an option.
So I usually refer them, hey, chat with your CPA. Most of the time it's going to be beneficial to do a 1031 exchange, but chat with your CPA and see if it works out for your tax situation. And usually it does, especially with, the markets that we're in nowadays with values having gone up substantially. It's more often not going to be to your benefit to do an exchange.
You indicated that you only do 1031 exchange real estate transactions. Correct. What type of real estate does this generally encompass?
Any real estate.
Any type of?
Any, yeah.
Including residential property?
Yes, yeah. So, but it's got to be an investment property. It is not applicable to a personal primary residence. Yeah. So if you've got a rental, you've got a townhouse over here and you're like, I'm tired of dealing with renters. I want to sell that property and I want to buy a vacant piece of land to, maybe hold on to for a little while or build some retail shop and then lease out the shops. You can do it that way. It's any real estate for any real estate, whether it's commercial or residential or vacant.
And as you said, vacation homes as well.
Sure, yeah. If they're an investment, yes.
Sure,
yeah.
Assuming they're renting it out.
Exactly. You've got to consult with your CPA on if it's a vacation home that you are using. Whether or not that's going to be defendable if you get audited, right? So if you were to sell a vacation home, depending on how much you've used it personally, may affect whether or not it can be used in a valid 1031 exchange.
So it has to be like kind, and I guess that would eliminate the concept of an apartment exchange for a houseboat that's also rented out.
Right, yeah, because I mean, I would believe the houseboat would be considered personal property. So you couldn't sell a townhome and invest in a houseboat to rent out because of the differences in type of asset that it is.
Is the tax deferral against federal taxes only, or does that also apply to Utah State?
So Section 1031 is an IRS code, so it is federal. So it's for your capital gains. Now, in certain states, they charge like a non-owner occupied tax. In Utah specifically, there's no tax or transfer tax that is paid when an investment property is sold to a buyer. So specifically here in Utah, there's no state tax that you're deferring with an exchange, just the federal capital gains. There are other states that do charge a non-owner occupied tax. And those are typically handled by the title company, the escrow company that is closing it within that state. And you have to apply to have those deferred.
I see.
So there are instances where they can be, but to my understanding, it's got to be applied for.
Can an investor exchange one property for two properties or vice versa?
You can sell, not vice versa. So you do sell one property, and we refer to that as your relinquished property.
Okay.
And you can buy as many properties as you want as your replacement properties.
But you can only sell one property. If an investor own two or three investment properties, they can't be all part of a single transaction.
Not to my knowledge, no. You'd have to do separate exchanges and buy multiple properties with those proceeds. You can buy up to 3 properties from selling one property. When you go above 3 replacement properties, there are certain ratios that come into play.
I see.
By calculating what you can buy versus what you sold. So it gets a little bit more complicated when you purchase more than 3.
What is perhaps the most unique property that you've ever been involved in?
Oh, the most unique property in regards to an exchange?
Right.
Well, I guess that depends on what your definition of unique is. The ones that I've enjoyed the most is when I know that investor's getting a property over in Hawaii. Then I can hit them up for some.
So you have to inspect it.
Yes. Yeah, I like to tell them that. We haven't been able to get that one through yet.
That hasn't worked out yet. Well, that kind of brings us to the next question, and that is, an investor in Utah can exchange a property in Hawaii or any other state.
Yes.
What about out of the country?
Not out of country. No.
Strictly within.
Yeah, we stick within the 50 states, and we can do exchanges for a property that's sold in California, and they buy properties in, whether it be New York or Hawaii or Florida. It's because it's a federal program, we're not limited to just what's here in Utah.
Okay.
Obviously, most of the people I'm dealing with are either buying or selling or buying property that's located here within Utah. But I've done a number of transactions where I was just the exchange company and helped them with their transaction, and the properties were all out of the state.
Are there minimum or maximum dollar values associated with the exchange on either side?
No, so there's no minimum. You could be selling a $50,000 plot of land and replacing it with something else. Now, when maximums come into play is when you sell a relinquished property, you have to replace it with a property of equal or greater value than your current investment.
Okay, so you can't trade down.
You cannot trade down, no. And if you have, let's say you sell a home or a property that's worth $100,000 and you have $50,000 of debt or a mortgage, when you replace that, you have to have equal to or greater amount of debt on the new property as well. So otherwise, if you were to have less debt on the replacement property or properties, it would be considered a taxable event because you're gaining money because you're having less debt. So the IRS looks at it as a gain.
You mentioned a mortgage, and that kind of brings us to the next question. How does having a mortgage on one or both properties impact the transaction?
It doesn't really change it a whole lot. It's just obviously if you've got a mortgage on a property, you're going to take less from the property as your net proceeds. So the less you have mortgaged, the more you're going to be able to roll into another property. And you just have to make sure with the property or properties that you're purchasing that you have the same amount of debt between those properties as what you had on the property that you sold.
I see. And how do you determine the value of each property?
It's typically based on the sales price.
Okay.
So
if the sales price is more than the appraised value, does that impact the transaction at all?
No. And you really don't deal with values, other than obviously having equal to or greater to values. So if you sold a property that's worth $500,000 and you're purchasing one property, the purchase price of that new property needs to be at least $500,000 or more to be a valid exchange. If you're buying two properties, then those properties need to be worth, together at least $500,000. So easy math, two purchases at $250,000 would meet the exchange.
Is there a minimum tax savings to justify the cost of processing and using the 1031 exchange concept?
Yeah, so depending on who you do your exchange with, your fees are going to be a little bit different. Most exchange accommodators or intermediaries, we like to use a lot of different terms in our business to keep people confused. It's what I call job security.
Of course.
But you'll pay an accommodation fee. Those range from $750 to, a few $1,000 depending on the intermediary and depending on the complexity of the exchange. So as long as you're, in my mind, as a business person, as long as you're going to be saving that much in your taxes, then there's a benefit of doing it.
Sure. When is the tax event recognized?
So if you sell the property in 2021, then it's going to be part of your tax filings for this year.
Okay.
So again, it's a deferral of capital gains taxes. So you would recognize the capital gains tax when you sell the property or properties that you're purchasing as part of the 1031. But if you did a 1031 exchange when you sold those properties that you're purchasing down the road, then you would continue to defer that tax. Now, this is as long as Section 1031 is around and existing.
Is there some doubt that it may not be?
I've heard rumblings that the Biden administration is trying to, it's on their agenda to get rid of Section 1031.
Simply because of the tax deferral that
they want to increase taxes that are paid by the citizens, and that is one way to get more taxes coming in.
Would, in your opinion, if that were to happen, is that going to be a major disincentive to real estate investors?
I would say absolutely.
Okay.
That's not even a question in my mind.
Sure.
It would definitely change a lot of people's minds on upgrading or changing their investment properties because they can't defer the taxes.
That makes sense. Based on your conversation, I sense there are timing triggers on this. Can you kind of review those?
Sure, yeah. So there are some strict guidelines with Section 1031. So when you sell a relinquished property, you have two major time schedules. You've got a 45-day identification period. So from the sale of that relinquished property, you have 45 days to declare what property or properties you are going to purchase as part of the exchange.
Okay. What if, excuse me for interrupting, but what if that 45-day comes and goes?
Then
When is the
the
deal?
exchange is automatically canceled. The Section 1031 does not allow for any extensions.
Okay.
Now, I guess that being said, we did have a little bit of an abnormality back in 2020 with COVID-19. There were some one-time exemptions on that 45-day, and your closing time frame, it was extended for any exchanges that were enacted during a certain period of time. But I don't suspect that's going to happen again anytime soon, if ever. But so, yeah, with that one exception, it's a strict 45 days on that identification period.
Okay. So is there also a trigger that once the property, the new property is identified, then is there a period of time in which that transaction has to be closed?
Yeah. So from the date of the sale of your relinquished property, you have 180 days to complete the exchange.
Okay.
So
is that 180 plus 45?
No, it's all the 180 is the total length. The 45 days is the first 45 days of the 180-day period.
Okay.
And so if you're buying, two properties as your replacement properties, you have to identify those within the first 45 days. And then again, within that 180 days, you have to close on both properties.
Do both parties have to utilize the 1031 exchange concept?
No. So if a seller is selling an investment property, the buyer does acknowledge that the seller is participating in a 1031 exchange as part of the contract and some of the exchange paperwork, but it doesn't have any effect on the buyer's side of the transaction.
How do you monitor the transaction to ensure that all of these dates are set, properly understood, and complied with?
We just keep good records and schedules. We just put things in our schedules. We put in reminders to ourselves and our exchangers, checking in with them usually weekly to say, hey, just checking in, see if you've got your replacement properties. There's a form that we have them fill out and sign to declare what their replacement properties are. It's an exhibit to the exchange agreement. So when a person is selling a property, they'll sign an exchange agreement with the intermediary, and the identification of their replacement properties is an exhibit to that exchange agreement.
Does a 1031 require the involvement of an intermediary?
Yes, 100%. Yeah, you can't do an exchange without an
On your own?
intermediary.
Okay. And what are the qualifications of an intermediary?
The qualifications are that it's anyone that is not the exchanger and is a disqualified person. So, obviously you have to have licensing. It's a business to do it. I'm not aware that you can do it just as an individual. I've never seen it. But licensing with the state to have a business license, and and that's about it. Obviously, the knowledge is a big part of it,
course.
but you just have to have licensing with the state.
So when the transaction involves the sale of a property, do those funds come to you for safekeeping and monitoring?
Yeah. So the whole thing behind an exchange as to why the taxes are deferred is because the exchanger never touches the money, technically. So
Never has access to it.
yes, exactly, and that's why they don't get taxed on it, because they never have possession of the money. Simply put, right? So when the sale is enacted on the relinquished property, the intermediary acts in behalf of the seller as the actual seller of the real estate. So the contract is assigned to the intermediary. The intermediary sells the property. Whatever net proceeds come from the sale, the intermediary retains. So we set up a separate bank account for the benefit of the exchanger, the intermediary, and the exchanger. And those funds are just held in escrow until the exchanger is ready to close on the purchase of their replacement property or properties. And then when they are, those funds, whether it's a portion of the funds or all of the funds, are wired to the escrow company that's conducting the transaction for the sale, and then the escrow company will bring in any other additional monies, whether it's from a lender or from the exchanger themselves, if they have to bring more money to the closing, and they'll hold all those monies in escrow, record all the paperwork, and then disperse. So again, that's all so that the exchanger never touches the money, so they can't be taxed on it.
Are you examined or audited periodically by either the feds or the state or some authority?
No, only the only times we really get involved with something like that is if the exchanger gets audited. Sometimes we get involved with the audit.
Can one exchange rights, oil, gas, mineral, water rights, etc.? Are those?
Those are
since
considered
they
personal
run with
property.
the land.
Yeah, well, water rights run with the land, but they're not actual real estate. So they're not part of a like kind of exchange. It would have to be water rights for water rights.
Oh, okay. And the same with mineral?
Yeah,
Or oil or whatever it may be.
Yep.
So that's the concept.
That's to my knowledge, yes.
Okay. So that would take it outside the
Yeah.
purview of...
I've never done an
real
exchange
estate.
involving water rights or oil or mineral. I usually, stick strictly to real estate.
Sure. How do you market your program? Is
I don't-
it just word of mouth?
Word of mouth. Yeah,
You've
we're
been in business long enough that people...
Yeah, people know what I do. I mean, my main professionals, title insurance and escrow services. Our exchange company is a separate corporation from the title
I see.
company. So we just use it to help people accommodate a 1031 exchange. And really, it's all referral based for me.
Sure.
It keeps me plenty busy just by referrals.
That's very good.
And we do it as a way to help our clients get transactions done.
When it comes down to accepting the transaction, what criteria do you have? And perhaps put another way, are there transactions that you would not want to be involved in? What would be some of the criteria that you would use?
I have a hard time turning away business, even if maybe something I'm a little bit new at. My dad always taught me, do your research.
Sure.
My dad, again, he's been doing them for, roughly 40 years. So he's done some really complex exchanges. If it's something that I'm not comfortable with, usually I'll bring my dad in on it and we'll work on it together. So there's your regular exchanges, there's your reverse exchanges. So that's doing the transaction backwards, where you're buying the property that is your replacement property before you sell your relinquished property. You can do it that way. It's a little bit more complicated, a little bit more costly, but you can do it. So, I mean, you come across a property that you just can't live without
Sure.
as an investor, and you're like, I want this one and I want to sell this one. You can buy that one first, and we can do an exchange in reverse.
We have time for one more question. How does one go about developing the skills and background and technical understanding to become an intermediary?
I'm not aware of any schooling that's offered on exchanges. It's just experience
I see.
and working in it. The reason I don't know exactly how many years I've been doing it is I've been, when I started in the title and escrow business, I was my dad's assistant, and he did a lot of them. So I'm sure I was helping him with them way back when. That was 20 years ago.
I see.
So hard to remember, but
Sure.
through helping him prepare the paperwork, and when I moved to different offices, I just started doing them, and just, obviously I would ask him a lot of questions, and he would always kind of oversee what I did. But for the last 10, 15 years, he just kind of lets me do my thing.
It
And
was just on the job
yeah,
experience.
it's all on the job experience to my knowledge.
If you're doing a transaction in another state, does that require an intermediary from that state be involved?
Nope. It's because it's a federal program. The intermediary can be located anywhere.
Okay. Well, Trent, this has been very interesting. Thank you very much for
Yeah.
your time. We
Thanks for having me.
greatly appreciate you you coming in and being with us today. And that concludes today's program. Our guest has been Trent Hendry from Mountain View Title. Today's program is brought to you by Stringham Schools, an ambition company educating real estate professionals since 1989. Visit stringhamschools.com for more information. And don't forget to tell us what you think in the comments section below. I'm Garry Barnes, and I'll see you next time on Stringham Real Estate Edge.